Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're firmly into 2019. Stock market's off to a nice start. Of course, the bond market is semi-flat for the year. Certain areas of the bond market are still appropriate to invest in. Short-term, overall, under 3-year maturity, floating rate securities, which again, we still own bank loan type funds. And of course, the equity market, in our opinion, only in the U.S. Strongest house on the block is the U.S. We are completely out of Europe or the emerging markets. Now, there may be a point we may want to tip our toe back into some of the emerging markets, but not quite yet. Well, I will tell you is this. We saw some volatility in 2018. We saw volatility in 2017 and 16 and 15. What's interesting is because we do a lot of research on the economy and about recessions, which is the major risk, again, all of those past years where Wall Street firms were all calling for recession, they were all wrong, and I'm glad to say Rezny Wealth Management was again right. Same thing goes at the end of last year, 2018. Wall Street firms, they were doing all kinds of mass liquidations of hedge funds and risky assets. We have gotten a lot of phone calls and or comments or questions from TV and radio show listeners alike that their so-called advisor started putting them in cash in December after everything was already down. So what's sad is now we're in 2019. None of these firms are talking about recession because we're not in a recession, and we don't see signs of recession at all, by the way, in our research. So we are fully invested in what we feel is proper invested given the current circumstances. What's interesting is those investors with those big firms lost a lot of money. Their investment so-called advisors started getting them conservative at exactly the wrong time. We had a nice pop back in the market, of course, for 2019, and they missed most or all of that recoup. I'm glad to say that our clients did not. We were fully invested properly. Again, because our research showed no signs of recession, we are invested properly. Now, that may change next week. It may change in the next 5 years or somewhere in between. We do a lot of research daily on the economy and how the economy is growing and the potential for recessions. We're not seeing it, but if we do find that's the fact down the road, we will be getting more conservative in our overall portfolios. I'm glad to say again, we were right and we're doing the right thing for our client. Remember, folks, we are a fee-only fiduciary money manager. We are active. We will make adjustments as we see fit, but even with normal volatility, which is going to be experienced not only with our clients, but any client, normal inter-year volatility, this happens every single year. So I wouldn't be shocked this year that we have a 5 or 10% pullback and potentially then again go to new high ground. This is normal. And I'm also glad to say that we had very few clients that were really emotional through this whole thing. And I think partially because we try to really educate through these videos. If you're, of course, a client of our firm, we'd like to talk to you and schedule a review appointment with you. Call the office. Schedule a review if you haven't already done so. I like to sit face-to-face with all of our clients on a regular basis. Let's go through results for last year. We can talk about this year. If you have any questions, as always, as a client, call the office and let's talk and let's schedule. Make sure you have yourself a safe and profitable day.